What was the motivation behind the National Consumer Protection Initiative recently launched by Mortgage Choice?
Maybe I just need to explain a little about what that is. The WA legislation and regulation is probably as close to what we're going to get nationally as is possible, which means that you have to apply for a licence there, you have to show that you've got the necessary training and accreditations, you've got to have the insurance coverage. But importantly over there, when you provide advice to the customer about which mortgage you're recommending, you're required to document why. Now, we think that's just good common sense. So what we did in the rest of Australia is say, well, it's going to happen eventually in the other states. Why don't we mandate our franchisees to do that now? Because if a customer comes back and says, listen, you gave me advice about X, why did you do that? It's documented, you can report on it. If there's a dispute, it's there. It just struck us as being common sense.
How do you feel about Challenger buying your competitors, Plan, Choice and Fast?
I think Challenger made a really good decision. They got out their checkbook and they wrote good cheques for Choice and Plan and Fast. If anything, I think it gives the broking sector a lot of credibility that somebody of substance in the financial services space is saying this is a pretty good market to be in, and to get into it, I'm prepared to write some decent cheques to buy good quality businesses like Choice, Plan and Fast. So I think it's good for the industry. I think it gives it credibility and an endorsement, a validation of what good is there. So no, I think it's only upside.
And with that price paid by Challenger, what impact and value would that have on Mortgage Choice being a publicly listed company?
I'd like to think it makes us more valuable, but that's probably self-interest running that race. But to be honest with you, both that and Westpac's purchase of Rams, which is a franchise business, again I think validates we've been listed now since 2004, we've seen our market cap rise and our share price rise. Any step like this has got to reinforce the brand of Mortgage Choice as a listed company. So as far as that goes, we think it's good news, and ultimately the market will make judgments as to whether we're worth more than what we are today.
What are your growth projections for the next 1 to 2 years for Mortgage Choice?
We're pretty bullish about growth. Because we're a public listed company, we give guidance on our profits to the market when we report. We said this year we were going to get somewhere between 5 to 10% profit hike. Which is slightly down on previous years, but we think now's a good time to invest back into the business, more marketing, more branding, greater concentration on training and education, bigger emphasis on recruiting more franchisees. We do all of those things, we think we'll get much, much better than 10% in 2008, 2009 and 2009, 2010. So in every sort of more challenging period, some people sit on their hands and pull the covers over their head, others decide to have a go. We're going to have a go.
What are the latest developments on the once bitter franchise battles that have gone quiet as of late?
They've been quiet for about 2 years. So to that extent, I think we've got a pretty harmonious environment with our franchisees at the minute. As in any family, family doesn't always agree. But more often than not, the family solves the same problems. Occasionally it'll become a bit more public. That was 2 years ago. Those matters have been sorted through. I'm pretty comfortable with where we are with our franchisee base at the minute. We can always do better, do more for them, help them grow their businesses, and that's obviously what we're about. But I'd like to think they're a thing of the past.
What are your thoughts on the current Rams issue, and how will this affect the industry?
Rams, I guess, is part of a broader, it's a microcosm of a broader development of what's happening in global credit markets. And since mid-August, what we've seen is that, for a range of reasons, largely emanating from the US, that money has got more expensive. Wholesale funding has become dearer. That means that if you're dependent upon it, whether it's securitisation or off-balance sheet lending, you're probably going to have to pay more than you did 2 or 3 months ago. Everybody's still absorbing the messages of that. I think it's likely to be the first quarter of calendar 08 before we get a clear picture as to what it all means. But in the shorter term, if you're dependent upon wholesale funding, you're going to have to pay a bit more for your money. That means you're going to have to try other ways to be competitive. But at the end of the day, I don't think we're going to be seeing organisations going belly up or anything like that. This is a good, vibrant sector, mortgage sector in Australia. The dynamics and the landscape have changed a little bit because of events of the last few months, but as I said before, I and the company are very bullish about the next couple of years.
I guess on that as well, how do you feel about Westpac acquiring Rams in the same way that, I guess, in theory, Challenger's buying Plan, Choice?
Again, it draws attention to this sector. And Westpac are paying a pretty healthy price for the Rams business, the 50-odd franchises and the 90-odd retail sites. Again, it says a major player sees value in this sector and are prepared to pay a price for it. I think we'll see more of that, to be honest with you, over the next 3 to 4 years. this game just constantly changes. You think you've got it right, and the next thing you wake up tomorrow and a whole lot of dynamics have changed. But at the end of the day, that's what makes it exciting. That's why it's a great space to be in.
Any other comments, anything that we think we've missed out on that you'd like to make a comment on?
I think generally we've covered the issues, Steve. I think at the end of the day, this industry is a vibrant, dynamic sector. It helps a lot of Australians. I think that's in large part why the people that are in mortgage broking are there, because they think they are helping people. Australians still have a really big appetite for property. We're starting to see investors come back into the market because rental vacancy rates are down, rental yields are going up. All of that I think is good news for the sector, but you won't win business if you just sit on your backside. There will be challenging times, and that I think means that you get out and have a good go and have your model working right, and then and just really execute well.
Very insightful. Thank you very much for your time, Paul Lahiff, CEO of Mortgage Choice.
Pleasure.
Here on Lending Central TV.
Good. Thanks, Steve.
Thank you.